Hello everyone, this is the second video on cash budget. So now let us look at the problem. It says that a company is expecting to have rupees 25,000 cash in hand on 1st April 2003. So this is the opening balance of cash on 1st April 2003, and you have to prepare an estimate of cash position, that is a cash budget for 3 months from April to June 2003. Then if you look from information has been given for the month of February, March, April, May and June, and the various items are sales, purchase, wages and expenses. So now let us look at the additional information. So the first one says period of credit allowed by suppliers is 2 months. So we'll assume that all purchase are credit purchase, and if the period of credit allowed by suppliers is 2 months, so it means that purchase in the month of February will be paid in the month of April, purchase in the month of March will be paid in the month of May, and purchase in the month of April will be paid in the month of June. Now, if you look at point number B, it says 25% of sales is for cash, and the period of credit allowed to customer for credit sales is 1 month. So it means that out of the total sales, 25% is cash sales and the remaining is credit sales. And this credit sales, the credit allowed to customer is 1 month. So it means that the credit sales in the month of February will be received in the month of March. The credit sales in the month of March will be collected in the month of April, and so on and so forth. Then if you look at point number C, it says delay in payment of wages and expenses is 1 month. So it means that we have here two expenses. We have wages and expenses. So there's a delay in payment for 1 month. So it means that wages and expenses for the month of February will be paid in March. Then wages and expenses in the month of March will be paid in April, and so on and so forth. Then point number D talks about the income tax for rupees 25,000 we paid in the month of June 2003. Now let us look at the working notes. Now working note number one, that is for cash sales. So for April, the sales is 92,000. So 25% is cash sales, so it comes to 23,000. Then for the month of May, the total sales is 1 lakh. Then 25% of 1 lakh, 25,000. Then for the month of June, the total sales is 1 lakh 20,000. Then out of it, cash sales 25%, so we'll get there 30,000. Then the collection from credit sales. So as according to adjustment number B, it says 25% is cash sales, the remaining 75% is credit sales. So the credit sales, the credit allowed is for 1 month. So sales of March collected in April. So the total sales in the month of March is 80,000. So 25% is cash sales. So the remaining 60,000 will be collected in the month of April. Then sales of April collected in the month of May. So the total sales in the month of April is 92,000. Then out of it, 23,000 is cash sales. The remaining 69,000 will be received, or the cash received from the debtors will be 69,000. Then also for the month of May. Then if you look at working number 3, it says payment to creditors for credit purchase. So remember, period of credit allowed is 2 months. So purchase in February will be paid in April, that is 40,000. Then purchase in March will be paid in May, that is 50,000. Then purchase in May will be paid in the month of June, that is 52,000. Then also point number 4, payment for wages and expenses. So delay in payment is 1 month. So wages and expenses for the month of March we paid in April. Then in the month of April we pay in May. In the month of May will be paid in June. Now let us look at the solution. So this is the solution. So the opening balance of cash is 25,000. You have to add the various cash received. So there's a printing mistake. They have written cash respects. Okay, so it'll be cash received. So cash sales from the working note, you can get it. Then the collection from credit sales, that is debtors, that also from working note number 2. Then the total cash received for the month of April is 1,80,000. Then the various cash payment to creditors, it is 40,000. If you look from the working note, you'll find that. Then the wages, that is 1 month delay payments, will be 8,000 for the month of April. Then expense will be 7,000, and there's no income tax paid during this month, so the total payment is 55,000. So difference between the total cash receipt and cash and the total payment is 53,000. So the closing balance of April will be the opening balance of May. Then the opening balance of for May is 53,000. Then there again, cash sales from the working note is 25,000, and debtors, the receipt from debtors will be 69,000. So the total cash received will be 1,47,000, including the opening balance. Then the various cash payment, that is creditors from the working note, can easily get it 50,000. Then wages, delay in payment for 1 month 9,000, and expenses 7,000. And there's no income tax, so the total payment is 66,000. So the difference between total cash received and the total payment is 81,000. So the closing balance of May will be the opening balance of June. So I think the rest you will understand.